most of the grades Indian industry is producing, and there is no dearth of steel as of now in the country. As far as the coal as a whole, the coal is concerned, the Indian industry is committed to reduce the coal footprint. The moment the Indian steel industry and DRI industry, sponge iron industry, they convert from coal to gas either through coal bed methane or through underground coal gasification or above the ground coal gasification, I think we will reduce the overall CO2 footprint in the country. So this is all today. As I already covered the market scenario, I have already covered the future trading. There is no need today for Indians to do any future trading in steel because Indian steel is available at a very, very affordable and economic price, and the difference, the delta in between export market versus domestic market will be there. So Indian prices will remain lower than the international prices. So there is no, I don't suggest that people should go for future trading or they should do any hedging today for steel. This is my recommendation to the people. And Indian industry is bound to increase the production, bound to put up new plants, new capex in times to come. Yes, the ROI has become better. As per CRISIL report last week, most of the Indian mills, they are paying back their dues and as well as their term loan back to the banks. So banks are also satisfied. And this shows when our ROI increases, that means there is a chance of more and more steel plants and steel units coming in the country. And the biggest factor will be the brownfield projects will come faster. And Government of India has given some benefits in income tax and corporate tax. If the new facilities are developed, then the income tax benefit is about 10% from 25% overall corporate.
And engineering goods. As manufacturing expands in India, local demands for these imported items would also go up and be met through local production. Thus, opportunity continues to exist in India for investment by business operating in these sectors. The point which Mr. Sharma has rightly made, that the major growth will come from among the 5 major players in India, but there are opportunities which are there for greenfield projects for global players also in India. They can. We are targeting to expand from present $0.4 trillion US dollars to $1 trillion US dollars from the infrastructure boost for boosting manufacturing. The government is establishing today, there is a program, production linked incentive across the manufacturing sector launched by Government of India, and the push for a higher growth trajectory is continuing with the government focusing in the budget, and it will continue during the year. Budget addresses key pillars of economic growth: health, physical infrastructure, logistics, ease of doing business, financial infrastructure, capital availability, R&D, and sustainable development. Government interventions are basically aimed at minimizing governance and creating a business and socio-economic environment. And the whole idea is that that the entire thing should itself act as a force multiplier and generate self-sustaining development. I can tell you a number of measures which Indian government has focused on. Almost $9 billion US dollar expenditure on upgrading health infrastructure, 40 billion.
6.08 million ton by fiscal 2020. That's what is shown in the graph, where is the growth is very high from the previous year. Iron ore exports in fiscal 20 rose to 186.06 million ton due to high demand in China and other steel producing countries. And a lot of exports of iron ore really has taken place from India to China. In spite of there has been a 30% customs duty on the high grade lumps of iron ore in India. Indian ore exports shipment were recorded at 3.9 million tons in February 21, largest stable as compared to 3.98 million tons in January 2022, according to graph show that the coking coal production in India and the coking coal imports, which is required for the steel making, almost are balancing over the years. You really see the coking coal production, which is shown in the blue line in the graph, and the orange line, which is the coking coal imports, almost are sort of balancing over the period of years. Though our imports of coking coal are much more because the domestic coking coal is not suitable for the steel making. But there is some discussions are going on with the Ministry of Coal how to really sort of augment the production of coking coal in India, and what exactly the process improvements, process innovations we have to do. And the discussions have started taking place so that the coking coal production in India can be augmented so that the same can be used for steel making. Next.
In China, or the steel mill in Europe or Korea or Japan or Europe or from America, they can come and they can install their steel shops here if they want, or the downstream industry. For example, India is going to be short of steel by 160 to 170 million tons. This means if you put up the 5 million ton capacity steel mill, then we need at least 32 more mills, more steel plants in the country. If you put up each plant of 10 million ton capacity, then we need at least 16 million tons, 16 more plants. So, which is a very large opportunity for the world. And the ArcelorMittal, it is not an Indian company; they are European company. They have already come in the country, and now they are expanding also.
See, when you talk about 2007, 2008, it was a very different situation. And I think Mr. V.R. Sharma has clarified that these are actual demands. These are not stockist demands. When we were in 2007-8, there was a huge crisis in terms of suddenly the investment in the steel company, especially it was CIS driven. And we could see that they will start selling steel at different price levels because the flow of money got stopped. But today, steel whether it is China or India, we are quite self-sustained, and I don't think any of us will be desperate in selling steel at a very low level prices. So 2007-8, the 2008 crash is not the one which is going to happen again now this time.